A warm welcome, all of you. This is Rizwan. Today I'm talking about investment strategy, the Falcon method. Actually, it's an investment process. It's an all-round investment process that relies on the principles of value investing, common sense, and quantitative discipline. The goal is to construct a buy and hold portfolio with a focus on both income and total return. Uh, Going on to the next slide. The Falcon method considered five steps. The first step is the quality criteria. Uh, Business have a great internal economic fundamentals and long-term records companies are the. We must invest in the top quality companies that have stood the test of time. So as a long-term investor, is aiming for wealth building and reliable passive income. We know that passive income is more important than active income. So it's very much important in our economy or our life. So you should go for the wonderful companies instead of the mediocre ones. The basic rule is stock must have at least 20 years immaculate dividend history, meaning no dividend suspension or cut to qualify. If a company has been able to pay growing dividends for decades, it's a sign for consistent earnings power. Taking this argument one step further, it is no surprise that companies with these characteristics tend to outperform. Going on to the next slide, which is next step. This is the value criteria. Actually, buy them on the cheap. This is the title of this step. Everyone loves bargain purchases. Buying top quality stock at low prices not only feels good but also leads to superior investment returns. Bargains are temporary as prices rise in the long run to reflect the underlying quality of the business. The basic rule of this step is take a multi-dimensional look at valuation. Use indicators like price to adjust operating earnings, price to operating cash flow, price to free cash flow, price to EBITDA, and examine their historical average in multiple time frames. Compare the current valuation ratios to the historical averages and make sure that the current level reflect a fair or better price. If you buy a top quality stock at below average valuation, the power force of being reversed on your side. Next step is the threshold criteria. For every dollar you invest, you want to get the most possible money in return. Under a certain threshold, you are not that keen to invest your capital at all. The basic rule of this step is compare the price you pay for a stock to the amount of free cash flow the company procedures per share, the money it returns to its shareholders through dividends and buybacks, and the dividend it pays, like dividend yield, taking the prevailing market condition into account, set absolute minimum requirement for these three and only consider a stock worth of your money if it meets all these three criteria. So this is the third step, the threshold criteria. Going on the next slide. The next step is yielding plus growth. Yield plus growth. Uh, a manufacturer ranking for maximizing total return, all things being equal. The higher dividend and the higher dividend growth you get for your money, the better. Your total returns is determined by the three components: the starting dividend yield, the growth of the underlying company, and changes in the valuation multiple. So the basic rule of this step is rank the stocks that survived the previous steps based on a yield plus growth characteristics instead of using an oversimplified indicator like the popular Chowder number employ, a weighted multi-factor quantitative ranking with yield plus growth numbers of different time frames. The higher the yield plus growth rank, the better. So the final step is sleep well at night. And it's also the finishing touch. Actually, it's a finishing touch. No matter how good a stock looks in a ranking system, if you don't feel comfortable investing in it, will you have a hard time holding on when a panic erupts. Only buy stocks that you intend to hold for the long run. At this point, rules have already played their part and human judgment comes into play. No matter how much one prefers quantitative methods, something simply cannot be quantified, filtered, and ranked in an automated way. This is all about this video. Thank you for listening me. Thank you all.